is not something that's covered by home insurance.
And flooding, flash floods.
Tragic floods in the United States in the past 100 years.
What is the one thing that most people believe that they are covered under an insurance policy, but they're really not?
I always bring this up, whether it's your first home or your 50th home, but flood is not something that's covered by home insurance. People are underinsured and don't even know it.
It was your name.
Jonathan Hawkins.
What do you do?
I own Hawk Insurance Solutions.
And how long have you been doing it?
Yeah, we were just talking about 16 years. Let's play out this scenario. There's a $2,200 claim, right? You may end up paying more than $1,200 by filing that claim.
What's the biggest misconception that clients have about an insurance agent?
You don't pay extra to go through an insurance agent. I don't charge a fee. You're not really paying more than you would if you go online and buy it yourself. Some companies don't even offer it through, online. But my point is that I'm essentially providing a service for free.
Perfect, man. Well, listen, Jonathan, thank you so much for coming on.
Happy to be here.
Yeah.
Happy to be here. Thank you for having me.
So if you could just give us your name, what do you do, and how long have you been doing it?
Yeah, appreciate it. So my name is Jonathan Hawkins. I own Hawk Insurance Solutions. It's a small independent agency in Raritan. I've been doing insurance, focused mostly on personal insurance for, we were just talking about 16 years. I started with Liberty Mutual in 2012. Then 2018, I opened up my own agency, mostly just because working for, you might understand this, working for one company and being able to offer one option, I didn't feel like I was doing my job well enough. And now being able to offer a bunch of different options makes me feel like I'm doing the right thing for clients and makes me able to be better at my job.
Yeah, no, absolutely. I mean, I have the same, I'm a mortgage broker, so
Yeah.
it's like you're always looking for the best solution for the client.
Right.
A lot of times
Exactly.
if you just work for one place, it's kind of hard to do that.
Exactly. Yeah.
It just
yeah.
depends on what their goals are.
Exactly. Yeah. And like I said, the more options you have, the better understanding of the market you have, the better, like I said, better bottom line, better you're able to do your job and do the right thing for the client.
Yeah.
Yeah.
So the main purpose of these podcasts is to basically to inform the first-time home buyer, and inform not just the first-time home buyer, but anyone who's buying a house.
Right.
Because as you know, like people, there are so many things that go into buying a house that everyone thinks that it's so easy to just go in and
overwhelming. It's overwhelming. My first-time home buyer experience was just that. It was. It's almost like the Dunning-Kruger effect. You don't know what you don't know, and all of a sudden you're kind of hit with a bunch of different things. And when I work with first-time home buyers or multiple home buyers, I always take time to try to educate. That's a big part of my philosophy in my agency, is to educate and make a smarter consumer, and one that knows what to expect and what they're getting, what they're buying. Because at the end of the day, it's on a piece of paper, but it's not just a piece of paper. It's a lot more than that.
Yeah, no, absolutely. So I'll go ahead and start. What is the one thing that most people believe that they are covered under an insurance policy, but they're really not?
So it's a great question, and it's something that I have as part of my spiel to every person I talk to about a home insurance policy. And I always start it the same way. I said, I always bring this up, whether it's your first home or your 50th home, but flood is not something that's covered by home insurance. Flood is a separate policy that you would either get through the government, they sell through agencies like mine, or more recently they've opened up a private flood insurance market, which has been fantastic for consumers. Prices have come down, coverages are better. For example, with the FEMA flood policy, the max coverage was $250,000. With private flood insurance, some of them go up to $5 million. So, I don't know, the house market very well. $250,000 isn't going to get you much.
Yeah,
especially
in North Jersey and New Jersey. Yeah.
Anywhere in New Jersey, yeah. But that's the most common one that that most people are surprised to hear. When you think of flood, and there's a very specific definition of flood, but when you think of flood, you see people, houses get soaked by water, and a lot of that time, a lot of it isn't covered. They said the specific definition of flood from FEMA is water where it's not normally. It has to be on 2 acres or 2 properties or more. The way I kind of boil it down to its simplest form is pretty much if water comes in from the outside, it's typically not covered.
Typically not. Okay. So
yeah. So pretty much think of like an overflowing river, or if if there's just a big inundation of water somewhere and it just starts flowing in from the outside somewhere, typically that's not covered. And the thing that is really important for a lot of people to know is, so FEMA, classifies a lot of properties by different zones, and that generally goes into their risk. And it's kind of a funny lettering system, but Zone X is the best, and Zone AE is the worst. So that's the highest risk flood. A lot of the we would say overdevelopment, or a lot of the changing, just landscape of the state and everything. There's a lot of those maps haven't been updated. So places that are considered X by FEMA are now getting water, and where they haven't gotten water before. The benefit to consumers for that, to people buying homes, is that those properties, the flood insurance is still low cost, and that's a thing. That's something to really consider, because I live in Somerville. My house, my wife's grandparents have lived in a house since the house was built in 1960. They're still here, healthy, rocking and rolling, and they have never gotten water. But in Ida, the water came up halfway up the block.
That's exactly what I was going to say, because I remember I was in Elizabeth. Funny story. Not funny, really, but
yeah, no, it's
but
great,
basically, I moved. I purchased my house in Bridgewater,
Right.
August 2021. That was 1 month before.
Yeah.
But I was selling my other house in Elizabeth,
Right.
and it was going to close in September. I think it was September 10th.
Right.
So if you remember,
Yeah,
it
right
was
there.
literally like Labor Day weekend,
Yeah.
something like that. And I'm already, we moved out completely. And I'm like, I'm at home, relaxing. And now the day I'm like, okay, it's raining, but it is what it is.
Right.
And I start seeing the news. Elizabeth is completely flooded.
Yeah.
I was like, holy crap.
Right. Right.
And that's something I never thought about. So I drove the next day, which was a nightmare. It took me like 2 hours to get to Elizabeth. Thank God it was just the basement.
Right.
And
Right.
it wasn't that much.
Yeah.
But literally one block up,
Yep.
I mean, people lost a bunch of stuff.
The entire end of my block was basically washed out because of a small creek that had never flooded like that. I said my wife's grandparents were there in Floyd in '99, and it didn't go up that high. So it's just and a lot of that can be attributed to just different, like I said, buildings and just different kind of, water routing and things that are new. And I said, the bottom line is, like I said, the maps really haven't been updated. So people that are in low risk areas may not be anymore, but their premiums are still low enough where they can protect themselves and get something good.
So is it something that obviously most people, when they think of insurance, they think, okay, it's just something that the bank is forcing me to have.
Right.
Do you think that people, when they go and start shopping for insurance, they should really, as opposed to, hey, let me just look for the cheapest one, actually, let's have a conversation about what I actually need?
That is such a big part of my philosophy as an agent. It's part of my, my process with clients is, especially with home buyers and homeowners. So that's something that I have focused on in my agency, is to speak with homeowners, and you could attest to this too. Most of these people are buying the largest asset of their entire lives, are the biggest purchase of their entire lives. They're buying for, in New Jersey, who knows, $500,000 easy, easy.
Easy, yeah.
So I've dealt with people that, are used to kind of the commodization of insurance, where it's a product and it's the cheapest, and just get whatever you could get, and that's it. Check a box and you're done. My challenge, and one that I take great pride in being skilled at, is to have people look at, especially home insurance, in a different way. Auto insurance is one thing, but home insurance, especially, you're buying something that's $1 million. Are you going to, and God forbid anything happens, are you going to worry about your monthly payment on your home insurance if whether something's covered or not at that point? You know what I mean? So what I do, and what I spend a lot of time doing, is educating and talking about the differences of homeowners insurance. And really, a lot of the meat of every policy, the core of every policy is similar, but where you could really have a difference is in specific endorsements and specific coverages and specific companies and how they approach claims and all that. So I spend a lot of time talking about that with clients, pointing out differences. I have comparison charts that I make and fill out, and I really try to illustrate, while keeping things as simple as possible. Again, people are buying a house. There's a million things going on. They're so inundated with information. So I try to keep things really, really essential, but also point out, hey, if A happens, this is what's gonna happen. If B happens, this is what could happen. So let's get A, even if it is more. I work with a lot of great companies, and some of the companies that I have are just so fantastically priced that oftentimes option A is the lowest price, and that's the best case scenario. But it's not always the case. So I have to explain why this has more value, what this is going to do and why this is important. And at the end of the day, I always say, listen, this is your decision. I just want to make sure you understand what you're picking and you understand what you're getting.
Yeah, because I mean, it's the same as a mortgage, right? I think it's actually more complicated than a mortgage. People just go, we're like, hey, just get me the product. That's it.
Yeah.
Because and there's so many stuff that you just don't know if that situation happens, are you really covered by it?
Right.
Which brings me to the next question, which is like, I see some, like a bunch of coverages, but can you explain a little bit of like what is like personal property liability, dwelling coverage? What is the difference? Like, I guess in plain English.
Yeah, absolutely. So you know what, and that's another great question. So like I said, the meat of every policy has 5 or 6 main coverages. So every homeowner's policy has the dwelling coverage. So that is quite simply the structure, right? That's the main building. That's your house. That covers, and you think, worst case scenario, place burns down or something like that. That's what's going to rebuild your house. That confusing thing about that number 2, just as a side note, a lot of people don't understand that has nothing to do with market value. So for example, I have somebody buying a house down the shore that's 2,000 square feet at maybe $1.5 million. Dwelling coverage is only coming in about $600,000 or $700,000. I'd explain, well, that's okay. That just means that's how much they think that it's going to cost to rebuild. But we could come back to that. Then there's coverage B, which is other structures. That's if you have anything on your property, garage, fence, pools is a big one. That's under that coverage. Coverage C is personal property. So that is your, for lack of a better word, your stuff, right? A simple way to think of it, and this is something I always used to, when I talk to people, take your house, turn it upside down. Everything that falls out is personal property. The only catch is there's limits to certain things, high value things, jewelry, physical money, gold, silver, firearms, fur, art, stuff like that. So I always talk to people about that. If they have some kind of specific collection or something, we could discuss that. And then D, a very important coverage. Coverage D is loss of use. That's if, God forbid there's a fire in your kitchen and you can't live in your house for 3 months while they rebuild it because, you don't have the facilities available to you. You have to stay in a hotel. You have to eat at restaurants. You have to use the laundromat. You have to do all these things. That's under your loss of use coverage. So that reimburses you for all that. That's what's called Section 1. Section 2 is your liabilities, right? So they have medical payments to others and liability. Medical payments to others is if somebody gets hurt on your property, whether it's your fault or not, just somebody happens to, great example is kids running around and somebody trips and falls.
Yeah.
And so that's money available to them to go to the hospital. And then liability. So your liability is something you mentioned. Liability is a very broad coverage, but just in its quite simplest form, it snows, you don't shovel the sidewalk, somebody trips and falls on your property, they're going to sue you. That's under your liability. You're covered for that. It's essentially negligence, what you're negligent for.
So I have a question about dwelling. So, obviously it's been crazy the last few years where things are just keep going up. Inflation is through the roof, right? We're still dealing with it right now. So what happens if you have a dwelling coverage of, let's say, 650,000, but then, they come back and say, okay, listen, to rebuild the house is going to cost you $900,000.
Right.
So are you on the hook for that?
You could be if you have the wrong policy. And I'll tell you, so that is something that I very much go with every client. Every company of mine has an endorsement that I really will not sell a policy without. It has different names, but the base name of it is the extended replacement cost. So just as a point of reference, each company estimates how much they think it would cost to rebuild your house using current data, right? Labor, materials, debris removal, all that. So in your example, they think it's going to cost $650,000 to rebuild the house. Okay, great. I have seen people not insured through me that have exhausted that limit. God forbid something. Actually, in Ida was an example. And then yes, they would be on the hook for that out of pocket. Or with this endorsement, again, won't sell a policy without it. And typically won't sell it without a minimum of 50%. What that means is there's a safety net behind that 650. Of 50%. So in your example, it would be $325,000 behind the 650 as an extra reserve to tap into in case there is a situation like, remember a couple of years ago when lumber spiked crazy for a few months? And that's another thing that happens with people that have stayed with a company for 20 years and haven't had an agent, go over their policy, perform a replacement cost evaluation, talk about their property. So yeah, there are situations where people are underinsured and don't even know it, or a situation that occur where, there's a huge catastrophe, and all of a sudden labor spikes, and all of a sudden to get materials is 3 times as expensive, where you need the safety net behind. I'm proud to say any homeowners policy that I have has that endorsement.
So I guess my biggest question is, I mean, I'm just thinking to myself, just for that reason, you need to like talk to your agent pretty much every year.
Absolutely.
Because most people just basically, hey, I just paid the mortgage. It gets
set it and forget it.
That's it. You know, I don't have to worry about it.
Yeah.
Including myself.
No, most people do, and it's a very set it and forget it. And the thing is, if you have a good foundation, you have a good policy to start with, that's less likely to hurt you. But a lot of people that don't talk to an agent just get something online, or you just get I have car insurance through here, so I'll just get it through here. You know, if they don't have a conversation, if they don't go with somebody that knows the policies, knows what the current market is, they could put themselves in a bad situation in time of a claim. Absolutely.
You know, I mean, listen, going back to the similarities between insurance and mortgages, and I did a video kind of talking about this before, but like, yes, you can go online, you can go ahead and just get a bunch of stuff. There's other things that you can do it yourself.
Yeah.
But the reason why you talk to somebody is because it's the same reason that you go to a doctor. The doctor is going to ask you questions to discover and get the real situation behind it.
Right.
As opposed to you, when you do it yourself, you basically, you might be talking online to like an AI agent.
Right.
But that AI agent is only going to be able to figure things out depending on what you tell them, as opposed to like what somebody else is going to be like, oh, this is what I usually see.
Exactly.
And I'm sure that they can, figure something out in the future, but there's always that emotional connection and that like, okay.
I don't think there's ever going to be any replacing talking to a human. There's a lot of talk in my industry. I'm sure there's talk in your industry about how AI is going to affect us and what the future of insurance sales looks like and all that. And I even hate the term sales. I don't sell. I advise and guide. And you do the same in mortgages. And like I said, talking to a local lender, local insurance agent, it makes a difference. And it's if you care about protecting, your most important things and even things that you don't even realize, it's always worth it to talk to a local agent. If you care about, getting the right mortgage for you, the right program. I always say I stay in my lane because I don't know anything. I don't know anything when it comes to mortgages. I don't know a millionth of what you do. And, that's why I always trust the experts. You do what you do and you do it well. That's why I would talk to you for a mortgage. That's, same for anybody looking for insurance. Talk to somebody that knows what they're talking about. We're licensed, you're licensed. And there's a reason for that.
Yeah. So the other big worry in insurance is deductible.
Yeah.
Yeah. And at least for me, because I see it all the time.
Yeah.
And anytime that somebody comes to me and tells me, hey, Danny, can you help me out with like 3-4 insurance quotes? And I'm like, hey, listen, I don't know about these. These are the people you got to just call and that's it, right?
Right.
But what is deductible and why it's so important for people to look into that when getting an insurance policy?
Great question, and that is something that has become a very important topic lately as prices have risen, and things are changing rapidly with costs and everything. The last few years, obviously, what a deductible is essentially your risk tolerance. How much are you willing to pay in the event of a claim? So, for example, if there's a claim and a covered claim and there's $100,000 worth of damage, your deductible is the portion that you're responsible for, and everything above that is when the insurance kicks in. Now, most homeowners for most of my career, the standard homeowners insurance deductible has been $1,000. That's normal. That's what most people have or had. Now, as prices have crept up on insurance policies and coverages and costs, I have the conversation with people that, hey, if you're willing to take a higher deductible, $2,500 now kind of more common than it was. You're responsible for $2,500. Then the insurance company kicks in after that. But in exchange for that higher risk tolerance, you're going to get a lower premium. Now, there are certain cases where people are at certain premium tiers of their policy, and it's not going to save a ton of money. But for somebody that it would save $300, $400, $500 a year, you're essentially betting that there's not going to be a claim for 5 years at that point. And if that's the case, you're making out ahead. You're saving more than you would have paid more out of pocket in the event of a claim. So as long as people kind of get that concept and they say, okay, yeah, I want to save the money now in the hopes that I don't have a claim. But if they do, they know they're responsible for a little bit more out of pocket. Yeah, that's something that I have a lot of conversations with people about lately. They said they're looking to save money. Another case where that comes up a lot is people that have a great policy where they're at, and switching policies could be prohibitive because then there's new inspections, there's new underwriting, there could be a thing. So they want to stay with the company that that they're with, but they want to save money. And that's something that we do. Well, we haven't had a claim. So, if you feel confident in your home and all that, that's something that we could, take a look at increasing your deductible, saving money. The other thing is that, let's play out this scenario. There's a $2,200 claim, right? There's a pipe burst or some water damage, and there's a $2,200 claim. You have $1,000 deductible. So in effect, you're going to file a claim to receive $1,200 at that point, because you pay $1,000, the insurance company pays $1,200. Because of surcharges, because of new rating elements, because now you're higher risk to an insurance company, you may end up paying more than that $1,200 over the next 5 years, which is normally the rating period for a claim. You may end up paying more than that $1,200 by filing that claim. So in other words, it may be smarter for you to
take the hit.
Take the hit, pay out of pocket, keep your insurance premiums low. But then that brings us back to the conversation. Well, then why not just have a higher deductible? Because if you're not going to file a claim for $2,200, then have a $2,500 deductible.
Yeah.
Yeah,
because I mean, I had that situation where basically I had this shed in my backyard.
Yeah.
A really nice one at that time. And it's still nice.
Right.
But I had my neighbors, a tree fell that was on my neighbor's property.
Yes.
Went in, and I'm like thinking, this guy has a really nice house. He must have like really good insurance.
Right.
And I go, and the guy goes like, hey, listen, I'm going to take care of the tree, but like that's not covered by, I think I have to remember the right term, but basically like it's an act of nature. Is it?
Act of nature, yeah. Act of God, yeah.
So if something like, hey, the tree fell through, like, hey, too bad.
Yeah, that's another great one for the misconception question was I actually asked this to as a quiz to people. I'm like, if a tree falls from my neighbor's yard and it damages my house, in your case your shed, who's responsible? Well, unless the tree was dead and the owner was aware of it. So in other words, if you saw the tree dying and you wrote a letter to the owner and said, hey, this tree is dying, please remove it, that's the only exception. But just normal act of God, act of nature, just falls during a storm, it's on your insurance, which is, I wouldn't say it's unfair, but it could be frustrating, right? Because now all of a sudden you have to file through your insurance for something that didn't come from your property. But if it happened the other way around, you'd be like, yeah, well, I didn't do anything. I didn't cut the tree down. I didn't do it. So it's kind of, you look at it from both sides. And that's something that as an insurance agent that I've come along with, like seeing things from both sides. I remember being a consumer. I remember how it felt to just shop for insurance and not really fully understand it. I try to put myself in those shoes constantly when I'm talking to people, because I want to see it from their perspective and bring it around to explain things in terms that will relate and hit with them.
Yeah, and now the other part. So going back to the point that you said regarding when to file or when not to file a claim. So I'm thinking, okay, you know what? At that time I was paying $620 a month. So I went ahead and said, okay, you know what? I'm gonna file the claim. I talked to my contractor. It was like, okay, it's $1,800.
Right.
I'm like, okay, listen, let me just file the claim. I have $1,000 deductible, whatever. 3-4 weeks later, because they had to send a couple people. Bottom line was that, hey, they took care of it.
Right. 6
months later, I get a letter.
Right.
I can't remember exactly what it was, but basically it was like, hey, we cannot insure you anymore,
Yeah.
And I was like, what the heck? It was like 3-4 years that I was paying these.
Yeah.
And obviously, and then doing the math, I'm like, yeah, if I was them, I wouldn't do it anyway.
It's so frustrating. And let me just bring that back to, that's another reason why it's important to have a local agent. I've had people in situations similar to that where, a lot of these companies and carriers are, automated kind of algorithmic based, decisions and stuff like that. And that's just the reality of it is, so much of insurance is actuaries and math and all that stuff. But there is a human element, and the human element is an agent, your agent, picking up the phone, calling an underwriter and saying, hey, this is unreasonable. This is not right. Let's take a look at this. And more often than not, I've had positive results just picking up the phone and calling the company and talking to somebody. And I've established great relationships with underwriters and people that are in these companies, especially being in the game now for a while, where I have that ability to make a difference for somebody and try to correct the wrong. And it doesn't always work, but it has worked more often than not. And I'm proud of that. I even had a client that had a company through a different distribution channel. Like, it's a long story short, about a home insurance policy through Geico, but it was with a company that I am appointed with. And he was having issues with that, and it was a friend of a friend. And I called and was able to resolve his problem, and then became his agent, just because of my relationship with that company, so that was unheard of. I think any insurance agent I tell it to their mind is blown. So.
Yeah, no, I mean, listen, the reason why you have an agent, you have a mortgage person, it's like because they're going to know exactly what's going on.
Absolutely.
They're going to have a better relationship with the bank.
Yeah.
And a lot of these things, whoever, if you're kind of like, I'll give the example of like people that go ahead and do a mortgage online, and they talk to somebody in Ohio.
Right.
And it's like, okay, when there's an issue, something that it's very easy to explain.
Yeah.
But if you talk to that person might be just making, I don't know, $500
out
per loan or something like that, where it's like, okay, you know what, get online.
Right.
They have no incentive
right.
to actually look into it and work and make it work for you,
Yeah.
So if you really want to get the deal done, you want to work with somebody.
Absolutely. It's a saying that I've kind of formulated in my own head, just with things with, value and things like that. You don't pay somebody for when things go right. When things go right, it's easy, right? But you're working with somebody when things go wrong. You want to be able to pick up the phone and call somebody, and you have that close contact with somebody. And even as even taking it further out for mortgages, I know, they're so complicated, and it's all kind of hidden. Like, consumers don't realize how complicated mortgages are. And there's just so much that goes into it, and having the ability, like you do, of being a broker and being able to get different terms and different companies or underwriting and all that stuff, it is such a massive advantage for you. And that's why I left Liberty Mutual as one company, even though I loved them as a company. They were great. I mean, I walked away from a good job. I came from nothing. I walked away from a job that I was doing very well at and took this risk literally for the the goal of doing better and being better at my job. And it's worked out, thankfully, but it was a lot of work. You guys know, it's a lot of work. First couple of years was rough, but we just kept at it. There's a saying in insurance, I don't know how accurate it is, but something like 92% of insurance agents fail within 2 years.
Yeah.
So I'm a proud 8%er.
Yeah.
I made it. I made it.
So now, going back to one of the topics. So what happens if there's a fire and I lost all my personal stuff, but I don't have a list of it? Like, how do you go about proving that? Like, how does that work?
Such a great question. I have thought about this. I mean, there's a lot of different ways that you could do this, but one of the things that I tell people when I, write them a homeowner's policy is I say, once a year, once every couple of years, go into the middle of every room of your house, stand in the middle and take 4 pictures. And so you could see every side of your house. And that is just in case, right? God forbid something happens. If in the event of a fire, your house is burning down, the insurance company will come out to you. They'll hand you a clipboard and they'll say, "What'd you have?" And, it's less about proof at that point. I mean, listen, if you said I had, the $50,000 couches and, they may require some proof, keep your receipts and all that stuff. But, for the most part, most insurance companies, especially in those times, those really drastic, catastrophic times, they're going to look at what you have and say, yes, this is reasonable. You had actually furniture or whatever it is, yes, that makes sense. But yeah, they'll just hand you a clipboard and say, tell us what you had. And you have to sit there and kind of remember, hey, I had this couch, and you will forget things. So I always recommend that, you do take pictures of your house, take pictures of your walls, so you remember what you have. There are some companies, there's one company in particular, one of my best companies that I write a lot of home insurance with, Franklin Mutual Insurance. They actually offer an app when you purchase a policy. They'll send you a link to an app, and it's essentially a home inventory. They give you kind of tips on things, but they say let's list what you have, and they'll actually store pictures for you too. So I think that's a great feature. It's luckily I haven't had anybody with full loss claim. But obviously, been in the industry, I have colleagues that have and kind of know the stories. And yeah, it's terrible. It's terrible. I highly recommend just keeping a stock of as much as you have and hoping nothing ever happens like that.
So what happened? So besides flood,
Mhm.
what are the other coverages that you got to have? I know I heard, I heard sewer backup or
Yes.
like what is the things that, like if right now you just got into a home,
Mhm.
your first time buying a home, you're all excited and everything, but
Yeah.
it's like, okay, you know what? Let me double check and make sure that if these things happen, I am covered. What are those like the top three things that
100%.
you need to have coverage in your insurance policy?
100%. Yeah. I have a couple of endorsements that I, again, as a matter of policy, I include them on every quote and really, really will try not to write a policy if it's not wanted because it's super important. So you brought up the first one, which is water backup. Huge coverage. So that if you have a backup of sewers or drains, again, this is, your water line, your sewers, anything like that, or if your sump pump malfunctions, overflows, anything like that in your basement, that's typically not covered by home insurance. But that has an endorsement that's available to cover, and it's called water backup, or it has different names for it, but the most common one is water backup. Now, some companies will just have a max of $5,000 or $10,000, which really isn't enough, especially if it's a finished basement, or especially if you have things in the basement, personal property, anything like that. And I look at it as if you have an event like that and there's water in your basement, I don't know if in Elizabeth when you had if you had any kind of water remediation, but like our Serve Pro or something come out, typically just to dry out a basement, just to just bring it back to where okay now it has to be fixed. That could cost $5,000 to $10,000 just for the remediation. Just so there's you dry it out so there's no mold or anything like that. So I always offer that, and I typically try to offer, especially if it's a finished basement, the max the company will offer. Most companies will offer a max of 25 or 50,000 that offer anything higher than 5 or 10. So we try to get as much of that as possible. Another big one that this is a more recent endorsement, and what I mean by that, it wasn't really available more than 10, 15 years ago, is service line coverage. Now, that is if there is any pipe or line underneath your property coming from the street. The most common one is a water pipe. You have a water pipe coming from the street to your house. If something happens underneath your property, the utility's not responsible, the town's not responsible, you're responsible. I had somebody that purchased a home in Boundbrook, and less than a month later, their pipe burst underneath their property. To get it dug up and fixed and replaced, all that was $19,000. Which can you imagine your first month you're in a home? He had a policy with that coverage with $25,000 in coverage, which is more than most companies offer. Most companies will only offer a max of 10 on that. And I had him with a company that had 25, and we wrote it with 25. He paid $1,000 out of pocket. I mean, I couldn't imagine being in a house for a month and having to pay $19,000. So that's a big one. That's one with the aging infrastructure. I mean, a lot of these towns are old. A lot of these pipes are old.
Yeah.
In New Jersey, it's just happening. I always tell everybody, if you're walking around town and you see a big brown line coming from the street to the house, that's a service line. Somebody had to do that. Somebody had to dig that up and replace it or repair it. And that's not cheap.
Yeah.
So that's one of those things that is very common. I'm trying to think for a third one. I mean, there's a couple to choose from. I think the most important one that I put on every policy is something called personal injury. This is a little bit more involved, and it's something that a little bit harder to explain, but essentially what it does is your liability coverage. Your liability coverage covers you if somebody sues you for direct physical injury. So going back to that example that I used before, if they, if somebody, you didn't shovel the sidewalk when it snowed and somebody tripped and fell and broke their arm and, they sued you for the medical bills, okay, fine. Now, if there's pain and suffering, if there's income loss, if there's, indirect loss or injury, not physical, essentially, that personal injury endorsement expands those types of coverages. And it helps cover those things under your liability coverage. So again, that's something that I just kind of throw on. It's a very inexpensive endorsement. But in the event of a claim, you have to think, worst days of your life, you would get served with a paper and get sued for something.
Yeah.
And it would be
It's scary.
It's scary. And even worse if you found out, well, I'm only covered for this portion and I'm not covered for this portion. So I always try to put myself in the mindset of those bad days, of those, what would I be terrified to find out that wasn't covered? Well, I want to make sure that it's covered. I have this saying and this kind of credo and this philosophy that no insurance policy is perfect. There's going to be gaps and holes in every policy and things that aren't covered and things like that. But my goal when I'm talking to somebody is to provide the best chance at coverage in the most amount of situations. So when I sell a policy, I try to sell it as broad as possible. And again, I use that, that saying that, that just, you're not going to worry about paying an extra $3 or $4 a month, versus saving this money.
Which was going to be my next question. Is like, how do you balance that? Like, what's your advice to those? Look, everything's expensive, and I feel like, when people go buy houses right now, they're making a sacrifice,
right?
No matter what, like, right now you're making $200,000, which a few years ago that was amazing. Right now it's like, okay, you're in New Jersey. It's like
you're doing all right.
Hey, I guess you're doing okay. You're surviving.
Right.
Yeah. You got money to pay some bills, right? Yeah. So it's like, how do you balance that?
Yeah.
Of like, okay, what if I put a gun to your head right now? It's like, okay, you need to pick two coverages. Mm-hmm. What are the things that you have to have?
Yeah.
And like, how do you make sure that you just don't overpay, right?
Right. Yeah. It's a challenge. It's a challenge because especially with something like insurance, I said it before, you're getting a piece of paper. You're not holding something physical in your hand that you're buying, right? So when you spend this money per month, it's really easy to think, what am I getting? What am I spending all this money on? And that's where I really take my job seriously as an agent to say, hey, let's talk about this. Let's understand what you're buying and why you have it. And then also, one of my things is I go through the policies and say, like, you know what? This might be a candidate for a higher deductible to save the money. If this is your budget, if this is where you're looking at, this is, in my opinion, what you can change to get still something that I could sleep at night with. And I say that seriously because I think this is what you want your insurance agent to have. I might care a lot, maybe too much, but I need to be able to sleep at night. If I write you a policy that is not going to protect you, it's going to keep me up at night. And I like my sleep. I need to be able to sleep. So, I at least, like I said, have the conversations, offer every option, and go through things. Like I said, the two most important things, the biggest coverages, like I said, if you put a gun on my head, it's the two that I will not take off a policy. It's typically water backup and the extended replacement. Those two I just will not write a policy without. And in most cases, the other ones I mentioned too, I really won't. There are some that I could kind of wiggle on, and I mean that lovingly, like, all right, if you really don't want it and you understand what you're turning down, sure, we could talk about that. But for the most part, if I offer every client flood insurance, for example, and if you don't want that, okay, cool, just I had to offer it. That's doing my job, but I could sleep at night as long as you know what you're covered for or not covered for. But for like extended replacement costs, especially in these times, I said it before, but like I said it during Ida. I don't know if you were in Bridgewater, you may have heard there in Somerville there was a couple homes that exploded. There was a big thing. Anyway, I know of one of them that didn't have the extended replacement cost, and I don't know, policy they had forever, and they were, I think, over $150,000 short. On rebuilding.
I remember driving through 287 and seeing the stadium completely flooded. It was bad.
Yeah, crazy,
It
right?
was just bad. Yeah, nobody,
Yeah, I mean, it's a once in a lifetime storm, but those things are happening more than once in a lifetime. It's crazy, and so that's one thing that I just talk to people. That's what insurance is there for. Insurance, respectfully, insurance is not there for the little things. It's there for the big things. And people, like I said, there is that kind of that balance between like, oh, I paid for this so many years, I never had a claim, and I had one claim and it's an issue. And yes, that is true, and that's really where it gets unfortunate. But for the person, I see it all the time online or anything like, insurance is such a scam. And then people insurance is such a scam. I'm like, I promise you, to the person whose house burned down and they had nothing, it's not a scam.
So how careful do you have to be about the company that is insuring you? Mm-hmm. Obviously, I know they're rated, the whole thing, but I feel like nobody thinks about that.
Yeah,
Obviously,
no.
I mean, we think in the business because we gotta, we gotta know who we're dealing with. But
Absolutely.
what are the things that somebody should be looking into when choosing a company, an insurance company? Not just that obviously you have an agent there to help you,
Yeah.
but to do your due diligence.
Absolutely. I'll tell you what not to look at, and this is something that I've had funny stories about, is the rating online. Don't look at the rating online for insurance company. That does not tell you the story of an insurance company. I had somebody that I called in and said, like quotes. I got them quotes, saved them money, improved their coverage, everything. And they said, oh, I looked at this company online and it had a 1.9 stars, and I was like, okay. And your current company, what's their rating online? Oh, I don't know. I'm like, go ahead and check. 1.9 stars. So it's the ratings online don't tell the full story. But for me, when I'm, the biggest factors that I look at is the broadness of the coverage, the broadness of the policy contract itself. I mean, every policy is a contract. Both sides have duties to fulfill. So I look at the contract. Most of them are very similar. They're based off of the same kind of, form, the same kind of setting. But each company puts their little spin on things, and I want to make sure that the companies that I offer have the broadest coverage available. So that's an important one. Another important one, maybe the most important one, is what happens in the time of a claim. Like, who are you talking to? What's their responsiveness? I mentioned my best company, in my opinion, was Franklin Mutual Insurance. They I had an issue with a claim for them. I called them. They had to check out the same day, and that's two-sided. That's my relationship with them, which is great, but it's their responsiveness. I've had companies where I have a client now who has a huge issue with a company, and I can't get through. That's another mistake. I don't work for the company. I work for the client. I'm a representative. I'm a representative of the company, but I advocate on behalf of the client. So, I want to make sure that I'm, facilitating the best that I can. And usually that's not a problem, but sometimes it is. And those companies, it's tough to recommend them. Again, going back to, I need to be able to sleep at night. If I have a company that is having problems with people in the time of a claim, in the worst time of worst days of these people's, potentially lives, I have a hard time being able to say, hey, even if they're cheaper, even if, something is better here or there, I say, listen, this is available. I don't know if I can recommend it. And typically I try to have at least 2 or 3 options and say, this is something that I feel good about that I can recommend. But again, as I always say, the choice is up to yours. What's important to you? To some people, being the least expensive right now for their situation is the most important. You have people, like you said, are stressed by everything right now.
Yeah.
The financial stress is insane everywhere. Getting inundated with everything. So, sometimes, you need to save money now, and that's okay. My goal with every client, like yours, I'm sure, long-standing relationship, long-term relationships, long-term business relationships, where I want to be there for, forever, for them, their family, their kids, all that stuff. So that's how I operate. And that's where I look at what's the best fit for this client right now, while balancing, what's the best, timing and policy and company for that moment.
Yeah. So, I mean, in all professions, we have misconceptions that we deal with, and that I feel like it makes it tougher for us to do our job.
Yeah.
What's the biggest misconception that clients have about an insurance agent?
So one that I've come across, and it's, again, kind of goes back to the insurance could be a scam thing, or even, what is my role in the process as an agent? What do I get? One of the things that I tell everybody is, you don't pay extra to go through an insurance agent. I don't charge a fee. You're not really paying more than you would if you go online and buy it yourself. Some companies don't even offer it through, online. But my point is that I'm essentially providing a service for free. I do get paid. Full disclosure, I do get paid from the insurance companies.
Yeah, we're here now. We're not in a charity.
Right. We work. I do get paid, but to the client, there's no difference. Again, essentially procuring it themselves and going through me. However, I'm providing guidance, recommendations, getting things set up, and being the person that you're able to call, being a resource when you need, essentially for free. But again, that's a big misconception that I've come across, and that's something that people don't understand. Oh, well, then why would I use an agent, or what? Well, because like I said, I'm providing the resource. You're getting the guidance, and don't worry about. I'm getting paid. Don't worry about me.
Yeah.
But you're not paying more because an agent exists. So that's something that I've come across a lot with people, like professionally, that there's no fee, and a lot of people are surprised. My favorite calls are when I talk to somebody and I tell them the process, I tell them what I'm going to do, I tell them, hey, I'm going to take your information, I'm going to shop things around, we're going to go over the policy, we'll set up a call, we could video call, we could do whatever. And my favorite ones are like, all right, well, how much does this cost? And I'm like, nothing. Like, this is just what I do. And they're like, really? I'm like, yeah, we're good. Don't worry about it. That's my favorite is that reaction. That like, really? This is like, yeah. And another thing that is like, somebody I spoke to says, we're starting to realize, this was a younger couple in their late 20s, early 30s that bought a house. They said, we're starting to realize we want what our grandparents had, which was these local relationships, these, this guidance, this, I always say it like, I'm on your team. Like everybody should have a team, a mortgage guy, a realtor, an insurance guy, a financial advisor. Everybody should have a team around them that helps them. And I want to be on your team. Check the insurance roll. I'm good. I'm here forever.
Now, listen, it's like you said, you don't have these things when everything, for the good times. You have it with the bad times. Mm-hmm. And the same thing with a mortgage broker, a lender, insurance agent. You use them because they have more experience. This is their specialty. Yeah. Just the same thing for me. Like if I don't go to a doctor for every day,
right.
Definitely when I'm sick, I'll go to a doctor.
Right,
and then when I'm scared, I will absolutely. It's like an attorney, if I'm in legal trouble, you bet I'm going to go to an attorney.
And you know what you shouldn't do? Don't go to WebMD. Don't go to Google. Because they say go talk to the doctor.
Yeah, just so, but listen, thank you so much for this, man. Definitely
my pleasure.
A lot of information. Looking forward to helping.
This has been so great. Thank you so much. You're doing great work, man. I really appreciate it.
No, thanks, bro.
Thanks, Danny. Yeah, this is awesome. Yeah. Thank you very much.